Hello and welcome to Tax Matters. Chiamaka Ohawuchi. A few episodes ago, we began serializing an exclusive interview with Mr. Muhammad Nami, Executive Chairman FIRS. We want to continue serving you excerpts from that blockbuster interview on this episode. Executive Chairman, sir, welcome once again.
Thank you for having me back.
Sir, the service appointed MTN, Airtel, Money Deposit Bank, in addition to the oil and gas companies that were acting as VAT collection agents. Now, I want to know, what's the idea behind appointing these companies?
Thank you so much. The idea is block leakage in the VAT administration process. Before now, you have service providers, you have suppliers working with these banks, working with telecommunication companies, and until we go for audit assignment or investigation assignment, that we come across the record of these service providers, we do not have their records. And some of them also, when we aggregate their turnover as far as the audit findings are concerned, and we compare to the turnover that some of them have declared or returned to us in the course of their annual filings to FIRS or during their monthly VAT returns filing, they don't agree. So what we now did was, okay, if that is what is playing out, this is a suggestion that not only the state or the federal government, as revenue authorities, there are things that we are missing out. But when we get your turnover correctly, vis-a-vis the remittances that will be done by these appointed agents, one, we are now able to use it to reconcile to whatever you are going to remit to us. For those that have been understating their turnover, we are now able to see that from the withheld VAT, even the returns from them continue to grow. So the activity, the transactions that hitherto are not disclosed to us, because they know that we now have the detail, they are bringing them to bear. The impact that is going to have, that apart from having intelligence or data for our own administration, is equally going to improve on the company contracts filing that they are going to be doing. Because understanding turnover before, now that they know that we have access to those turnover, they are now giving us the appropriate returns that we should ordinarily get. And above all, this process is a process which is akin to blocking leakages hitherto in those sectors. So we trusted those the agents that they will deduct and withhold to us because of their past experience or past record with us. And we feel they have grown from just ordinary taxpayers and they cannot be trusted as agents just the way we have trusted ministry department agencies and also trusted the oil and gas sector. The implication of it is that the micro and small tax offices where they hitherto make returns to for purpose of paying VAT, their collection from VAT has gone down, but where the money board deposits, where they are filing return, and the oil and gas company, the withheld VAT that is being remitted is rather going up unbelievably very high. The extent is to block leakage and raise more revenue, and by the grace of God, we are achieving that.
We are staying with the Finance Act 2023. You'll recall that last episode we informed you, as it had been in the media space, that the Finance Act 2023 will now take effect from 1st September 2023. The Executive Chairman FIRS, the #1 taxman in Nigeria, President Carter, is our guide today on the provisions contained in the Finance Act 2023. Can you please give us an overview of the major highlights of this Finance Act and the implications on the operations of the service, or how it will impact the operations of the service?
The essence of the Annual Finance Act, which has now become a routine since the year 2019, is to cater for issues that are before now very difficult to fix. One of such issues is that if there are errors as far as legal languages are concerned, opportunities are provided to tax administrators or to the policy makers to look into those errors and correct them. The way of doing business, generally our way of life, has changed completely. The business model of FIRS is not the business model that we have today. And I can assure you, it's going to further change tomorrow. So the tax laws cannot remain rigid. They have to change. They have to change as events unfold, as human development evolves. So this is what Finance Act is able to bring about. You remember in the past, it takes 20, 30 years. If a provision is A, it's A. Nobody changes it. But from 2019, if we identify issue in 12 months' time, we suggest on how those issues are going to be fixed. If there are policy issues that the government feel needs to be adjusted or need to be considered because the business model generally has changed, it is provided the opportunity to also do it. The Finance Act 2023 came with so many changes, and those changes are things that will impact on our processes going forward positively. One of those changes is definition of building, which hitherto was also said to be including telecommunication marks, a moving caravan, and so many other funny issues that were captured. That has been redefined to reflect what actually the meaning of building is. We also have issues that we appointed tax agents to collect taxes or VAT from the telecommunication players on behalf of the FIRS, or those that do business with the commercial banks. We say when they have business with you, just the way ministry department and agencies are doing, just the way the oil and gas sector has been acting as an agent, we now ask them to deduct and remit, and instead of paying the full value of the invoice to the supplier, take the VAT element and remit to us. So we now run into challenge. And one challenge was that, at what point will the person remit the money so that the person's money that was taken at the source, when he's filing his return on or before 21st of the month following the transaction, is able to have that credit to claim as input when he's filing his own global VAT returns for the month. So that becomes a challenge. So people started advising us that we require legislation, because what we said when we were appointing this agent was they should file returns on the 14th of the month following the transaction. But that instruction has no legal backup. So what we have done now, we have amended the relevant section of the law. The financiers are now provided legal support to what we have done. by ensuring that companies that have deducted file returns for withhold VAT on the 14th, at least on or before 14th, or the month following the transaction, or the month that these deductions were made. While they also are expected to file VAT for their own transaction on or before 21st of the month. The intention now is that the people that you withhold their VAT, you will be able to remit it on the 14th, giving them 7 days opportunity to now check through our system to confirm if these remittances have already been done, so that when they claim their input, they are now entitled to it. So many other amendments were done, particularly to the Third Fund Act, where the tax rate has been moved from 2.5% now to 3%. From moving it from 2% to 2.5% before has assisted government to realize more revenue in the past. So I want to also assure you the additional 0.5% that has now made it 3% is going to bring a lot of money on the table of FAC for them to distribute on a monthly basis, and is going to give the federal government enough money to fix our schools, enough money to train our lecturers, enough money to invest in research at the tertiary education level. So the summary of it all is that we are making tax compliance a lot easier with the amendment. Clarities are being provided for issues that are slightly not clear to the taxpayer in public, and there are now more funds in the hand of government for them to be able to execute projects as approved for them by National Assembly.
Finance Act 2023. Remember, effective date of the Finance Act 2023 is now September 1st, 2023. Now, on the tax to GDP ratio, we are glad that Nigeria has moved up to 10.86%, although we are not where we wish to be, but we know that we are getting there. Now, in the statement under review, it was reported that you said that the ratio could have been higher if we did not have a myriad or plethora of tax waivers, and if the SMEs with turnover below 25 million were not exempted from companies' income tax. Would you want to expatiate on this? And if those do not exist, do you have an idea of what the ratio would have been?
Certainly, I want to believe we may not be in the ratio of 27-35% that South Africa and or Algeria is currently, but I know we should be doing a region of 15 to 20%. The reason being, there is huge leakage out there, particularly as a result of the informal sector activity. And that is why our focus this year has been on the informal sector and addressing multiplicity of taxes. Why do we have to address the issue of informal sector players? Is because they operate in a sector that we feel what people have classified to be informal and not formalized. They don't file tax return with any of the tax authorities, neither with the State Internal Revenue Service nor the Federal Inland Revenue where we work. Then the second thing is the issue of the threshold. People are capitalizing on the fact that there is a threshold of 25 million and below. And they continue to say, because they are in the informal sector and covered by the fact that people believe they are informal, they don't even come to FIRS for anything. So what I think I was trying to explain to Nigerians is that if not for the threshold, one, and the incessant waivers in our tax system, which has now even created a problem for leakage in the same tax system. You know, what the law was trying to address was to encourage people and give money to the small players so that they are able to grow. So even those that have grown before the enactment of the 2019 Finance Act decided to become very small. So these are the issues, these are complications, and that is why the suggestion we're trying to do, we are not trying to say that they are now going to be exempted businesses, but we want a situation whereby if Muhammad Nigeria Limited has an input, for instance, that has to do with its operation, and Chiamaka Nigeria Limited has an input for her own operations, the bottom line is that everybody should be able to claim input VAT in the course of its operation. We shouldn't say that Chiamaka should capitalize her own, while Muhammad should make a claim. Let everybody claim the input, and where you have excess as a result of the value addition, you remit the excess to the revenue authorities. So these petty issues in our law are the issues that are creating a lot of issues for us, and that is making the tax to GDP ratio to be very low. Another key one is that taxes, I say it anywhere, and you should quote me anywhere, there is nowhere in the world that levies, taxes, and fees are paid all over the world than this country. But where are the money? There are records. We are currently working on the issue of multiple taxes. I can assure the minimum that has come to my table is over 30 tax types. And the information out there that is about 60, between 60 and 70 fees, levies, and taxes. Then who are these monies being paid to? That is the challenge. So these monies that are paid ends or end up in private pockets or pockets that you never can ever think that they exist or they existed. So these are the issues that we were referring to. If not for this pocket of leakages or pocket of challenges, our tax to GDP should be in the region of between 15 and 20% today. But also take note, we just didn't mention that in our bulletin, but before the rebase of our economy, the tax to GDP was high because our GDP was low. But immediately it was rebased, the tax contribution to GDP now shrank simply because the basis for which you use in measuring the tax payment has now gone up, and the tax collection did not go up at the same rate as the GDP has grown. The last one, which is quite unfortunate for our country, we run a country with 3 tiers of government: local government, state, and the federal government. The computations before now for tax to GDP has nothing from any of the 774 local government into consideration. There is no record of those collections. It took me 6 months collecting record of the year 2021 before we were able to do it. So those leakages are huge. People are paying levies, are paying fees, are paying taxes on daily basis in our motor parks. People are paying money even at the point of delivery and death of people, but all those monies end up in private pocket. This is what other countries are properly accounting for and considering as taxes, and use them to compute their tax to GDP. So until all these issues are put together and considered in the future, our tax to GDP will continue to be low, not just because taxes are not being paid, but they are not properly being accounted for and or reported.
Now, you've spoken glowingly about the support the FIRS under your watch had received from the past administration. Talk about the former president, and also the same appreciation goes to the then Minister of Finance and the 9th National Assembly. Now, a new administration has taken over. What do you want from the new administration in terms of assisting the FIRS in achieving greater heights?
Well, I will only request that they continue from where the former government has stopped, They provided us with every support we needed, including financial support for funding our business processes and to make sure that we invest heavily in technology and capacity building. Then our own critical infrastructures for our office administration, including furnitures and prototype offices that we erected nationwide. We will continue to request that they support us there, and I would request also and plead with them to sustain the Finance Act process every year so that the changes, not necessarily tax changes, and corrections of law that will require, or innovations that are required to support them in realizing the budget, annual budget proposal to National Assembly can be channeled to the finance bill on an annual basis. We also request that they give us the usual support, that I know the body language of Mr. President is expected of the service, which is huge tax reform that will address the issue of multiple taxation in Nigeria, that will bring about huge revenue on the table, that will take care of the huge budget deficit that he has inherited, at the same time be able to deliver on the mandate that Nigerians have given him. So we want that goodwill that Mr. President has, the people that will be part of the team, at the executive level, the judiciary, at the same time the National Assembly, should give him that support, because I do know whatever reforms we are suggesting to Mr. President, the goodwill is there. He will surely work on it, and we know also that he has the willpower to make that things happen. So we only request that they continue from where the past administration has stopped, and we continue to do the right thing for Nigeria.
Now, finally, before we let you go, how would you want the FIRS to be perceived by stakeholders, especially taxpayers?
Well, since we came on board, you are reminding me of my takeoff points, and the first that was on my mind, we wanted a service that is customer friendly, and so far so good. The entire country will bear us in witness. What we are doing today is to speak to taxpayers so that they appreciate what we are doing. So we want a service that takes our customers seriously, and the customers are the taxpayers, for every concern that they have. We have been giving them the required support, and will continue to do so. As FIRS2, our emphasis has been collaborating with critical stakeholders, including media organizations like yours, so that we are able to build a transparent, strong, and efficient tax system that works for everybody.
Thank you very much, Executive Chairman.
You're welcome.
It's really a pleasure talking with you and gaining from your wealth of knowledge and experience.
Thank you so much.
Taxation rests on a tripod: tax policy, tax laws, and tax administration. Tax laws are dynamic, as the Executive Chairman FIRS said. Now, with the Finance Act being a yearly routine, the judges must be kept abreast of the changes. In the recent past, the FIRS has hosted trainings for judges. Yet another training section took place on Thursday, 15th June 2023 in Abuja.
Over the years, the federal government has been consistent in amending financial laws, which have invariably introduced some notable changes to tax administration in Nigeria. These amendments are necessary to accommodate the speedy pace of technology, global commercial changes, as well as provide solutions in our precarious economic circumstances. These changes to tax system brought about by fresh challenges in addition to those already on ground, such as the problem of increase in tax disputes and disagreements which may only be settled before competent courts of record. Hence, the necessity for us to interact and discuss forward-thinking approaches to the usage and applicability of the courts and other stakeholders.
The role of the judge in a tax case, mark the words, is primarily to interpret tax legislation in the light of the facts found. This judicial work is sensitive both to the factual nuance of the case at hand and legislative complexity of the law in question.
This will be the major item on our menu on the next episode of Tax Matters. Thank you for watching. See you next week.